Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Inflation and earnings. These are the two things that are going to tell us what to expect for the rest of 2023 and what the stock market might be headed towards for the rest of the year. That is because yesterday we heard from Home Depot, today we heard from Target, and tomorrow we are going to hear from Walmart. Now, what do all of these three things have in common? They are consumer stocks, places that mostly me and you go to stimulate those businesses, but also gives us a little bit of a glimpse of what to expect from the overall economy. That is because consumer spending makes up 60% of the economy. Okay, 60%. Now, you can't take these three companies and just say, because these three companies had good or bad earnings, that this is where the world is going. It's not necessarily how it works, but it does give us a glimpse. And that is the glimpse that we're going to take a look at for at least two of those companies. Yesterday, Home Depot came out and said, we're seeing a slowdown in consumer spending. Target said, hey, we beat on our numbers. We made a little bit more than what was expected. However, we are seeing consumer spending slow down. We also got a government report that said that consumer spending went up by 0.4% last month. The problem with that is it is half of what was expected. They were expecting a 0.8% increase. So it seems that consumer spending is slowing down, which would seem like a bigger issue for the overall economy. And depending on who you are and how you're looking at things, it could seem like it's a slide right down into a recession. I would pump the brakes. That doesn't mean that that's not true. Doesn't mean it's not true, but I would pump the brakes. That's because Home Depot is in a weird scenario. Obviously, they are a home improvement store. It is not a place where you go every single week unless you just bought a house, which I was at Home Depot and Lowe's every other day when I first got here. Now I've gotten what I got. I don't really go. I ain't been to Lowe's or Home Depot in a good while now. But we also know that because of rising interest rates, home prices have kind of stalled out a little bit, but also home purchasing. Nobody wants to buy a house for double what they could have gotten it for just a few years ago. If my interest rate was 2.5, maybe 3%, interest rates are 6 going on 7%. Why would I do that for the exact same house? It doesn't really make any sense, does it? So that is one reason why I think Home Depot, Lowe's, yeah, it would make a lot of sense that people aren't spending what they were, especially during the pandemic, when people were buying more homes and people were stuck at home, so they wanted to spend more on improvement goods. That makes a lot of sense to me. Okay. Now for Target, things are a little bit different. Target is a store where you can go to every single day for all the things that you need, most of the things that you need, minus groceries, depending on what your Target looks like. But they did see in their consumer discretionary categories, things like furniture, home goods. We had talked a lot about this last year. They did see slower spending there, even though they saw they made more money this year or this time than what they did last year. And they are a little bit concerned about what to expect for the rest of this year. All of that is plausible. Most companies are revising their guidance down, meaning they're not expecting making more money the rest of the year compared to what they made previously. Everybody's been saying that across the board, even though hiring is still solid and consumer spending, to a degree, depending on how you want to look at it, is at least solid. Okay, maybe not great, but at least solid. And we still know that while inflation is still coming down, it's still up there. So those are the things that we have to contend with. Now, I think Walmart is going to give us the best picture because Walmart is in more locations. I think that is, I mean, say how you want. I think Target's a little bougie. Okay, everybody can't shop at Target. I'm not fancy enough to shop at Target. I'm lying because I'm sure I'm not shopping at Walmart. But Walmart is more of a baseline. It's in more places. I mean, everybody's got a Walmart, unless you're in New York City, got a Walmart within a stone's throw of you. And the main thing is they sell both regular consumer goods, home goods, and groceries, which I think is the most important sector because that's something that you're going to really see whether people are really starting to cut back on certain things. Say, look, I got to slow down my food bill. I need to do things differently than a Target or especially a Home Depot where it's a lot more niche. That's just my opinion of it. And I don't know what Walmart is expecting. What I can say is that Walmart did outperform from a stock market perspective. It did outperform Target. Target dropped 20% last year compared to Walmart that was up 2%. 2% is not anything to yell home about, but again, when your competitor, your main competitor is down 20 some odd percent, that's kind of an easy win. So you got to be careful there and just pay attention to what Walmart is saying and what we expect to happen there. People's expectations, mine included, Could be wrong, could be off. We could see this coming summer that people get back to their normal ways and perhaps they're just saving and they're ready to go out and ball out on a vacation this summer. That's possible, because what we have seen is in the travel and leisure business, ain't nobody slowing down on purchasing in that spot. I think it was both American Express, I want to say Delta too, when they announced earlier this year, say, hey, we're not seeing a slowdown. We're going to raise our guidance, and we think people are going to spend more. We think we're going to get more revenue as people go out and travel during this holiday season. Okay, so we'll see. We will see if that is going to be the case, but it's starting to paint a picture. There are a large chunk of companies that think that things are going to slow down. There are others that say that they think things are going to be fine. That's the exact same, so what I'm looking for, exact same outlook as Goldman Sachs versus every other bank. Goldman Sachs has a 35% chance of recession. Everybody else, 65%. So there's that, right? But the main thing is you do want to pay attention to consumer spending, perhaps more than anything else outside of the debt ceiling. That's going to be a catastrophe if that doesn't get passed. We are supposed to hear something by the end of the week. We'll see whether or not that happens. There's that. But the main thing is consumer spending is the thing you want to keep your eye on. One other thing that I would really urge you to keep your eye on is the whole student loan debt thing. Why is that an issue? Because 40 million people are currently not paying their student loans due to the student loan debt pause that was pushed through back in 2020. It's been 3 years. Now, it is, as someone with the economics degree, economist, whatever you want to title be in this particular case, as somebody who is looking at the situation like this, if you're not spending $300, $400, $500 a month going to the Department of Education during these last 3 years, you have likely been spending that and putting that into the economy. Increasing the economy, growing the economy. The example that I've said plenty of times before over the last 2 years or so is, example for me, if I'm not paying my student loans, I can hire somebody to go and do my yard and do my deck and do all kind of stuff. But if I now have to take that money out of the economy and give it back to the Department of Education now, then those businesses, and these are small businesses in this case, those are the ones who are going to hurt. That's going to trickle out into bigger parts of the economy. That would be something I would also look at, because 40 million people is no joke, right? And these are not $5 and $6 payments. These are usually hundreds of dollars, if not thousands, depending on how big that student loan payment was. I'm curious as to where that would go. I think in the best interest of the economy, if you were to forgive that debt, those people can continue spending and continue going to Target and Home Depot and all these other places, and the economy can continue growing, perhaps better than what it was before, but at least continue growing on a steady pace as opposed to stopping. Because that would be something where you would see 40 million people who are spending at a certain level they were all used to for 3 years straight, and then that money is taken out and going somewhere else, and that money is not being circulated. So that would be a question. That would be a major question. I'd be curious to see how that's going to impact the economy at all, because it's interesting that, yes, the debt ceiling is obviously important. Yes, inflation is obviously important, but it's that last factor that kind of gets pushed back and is going through the Supreme Court now. We'll see when they rule and what that ruling is going to be. The last thing I did here was that there's a motion to throw out the case with SoFi. Now, I'm not an attorney, so I'm not going to go into the odds of that happening and what happens next. I don't know, but I would assume in the next, month or two, we would hear something. But those are the two things, really the three things that you want to pay attention to. Inflation, is it going to continue to fall? Earnings, what are we going to hear, especially from Walmart and others this week and next week? And then start to piece that together to see what we should expect for the rest of the year. As an investor, this is really just a continuation of dollar cost averaging. It's a continuation of investing in some of the undervalued stocks that are doing quite well right now. I did an entire list inside of our members only. And I did a free list for people who just subscribed. So go ahead, if you haven't subscribed, go ahead and do that and go to our video. I think it was last Friday. Last Wednesday, I think, where I went over, I think it was 3 or 4 of the best stocks that are still undervalued right now. That's why I would continuously invest, and that's why I would continuously dollar cost average, at least for the rest of this year, because those are the areas that are doing quite well right now. All right. That is it for me. Also, you know what to do. Go ahead and join our members only and leave a like, subscribe, and comment. Those are like your daily to-do list. So you want to make sure that you check that out. All right. That is it for me. I'll talk to you later. Bye.